Bill Ackman is back. After successfully completing one of the world's greatest trades, netting him and his firm over $2 billion in profits, Ackman appeared on CNBC Wednesday afternoon for yet another interview that drew some headlines. His firm gained some serious notoriety betting against the markets before health issues destroyed economies around the world. The founder and CEO of Pershing Square Capital Management revealed that he continues to own the same positions he had prior to March, which included Starbucks, Hilton, restaurant brands, and Lowe's, adding his hedge fund is 98% long, meaning they're very optimistic in regards to American equities.
Bill, given where we are today with now COVID cases, what seems like a record surge, are you bullish today? Are you bearish today? And let me also ask you specifically about your positions, not just your thoughts, but your positions, so that we don't get into a thing where viewers or others are saying that you're saying one thing and doing something else.
Let me be super clear. We are long-term bullish on America. We are long-term bullish on the markets. We continue to own, the same positions we owned in Hilton, Starbucks, Lowe's, restaurant brands. We invested, subsequent to that year, $500 million in a real estate development company with major operations in Houston. Obviously, we are bullish on the country. But I would say I am cautious on markets over the next period of time. And we have today a short position in a high yield index. We are bearish on highly levered companies to some extent. I view that as a hedge. I don't know whether we make money on it or not. But the highly levered businesses will struggle because it's going to take time for the economy to reopen. But we are about 80%. We have about 20% cash in our publicly traded entity, and we are approximately 98% long. So the entity itself is leveraged. So the cash offsets the debt. So we're effectively 100% long, and we have a short position in the high yield credit index, which is a composite of companies with junk credits.
However, there was some confusion after Bill began to use the golden hedge fund phrase, cautiously optimistic. Ackman added that he does indeed have a short position on a high-yield index because his firm is bearish on highly leveraged companies. What this essentially means is that they're betting against companies with a large amount of debt due to the fact that these businesses are at a higher likelihood of default or bankruptcy during a crisis and have a low chance of receiving a federal bailout. There are a ton of high-yield index funds that Ackman's firm could be targeting for their short, but based on his comments, it seems that this position makes up a very small piece of the company's overall portfolio. Regardless, Ackman's comments are both confusing and in a way worrisome if you pay attention to his interests and past appearances on CNBC. It was not too long ago that he got emotional saying Hilton Stock, along with every other hotel stock in the world, was on its way to zero.
Now, take a look at Hilton Stock. We're a major shareholder of Hilton. Hilton is the canary in the coal mine. This is an incredibly well-capitalized, amazing, dominant global company that actually doesn't own many hotels. It just collects royalties. It's down from like 120 to 50. Okay, it's going to zero. Okay, along with every other hotel company.
If you'd paid attention to his hell is coming speech and sold everything during that panicked interview, you would have missed out on one of the greatest stock market runs in history, while he rode the short to the bottom and bought after closing. The S&P 500 since that infamous interview on March 27, 2020 has rallied from 2,541 points to 3,264 points, representing a 28% return. The truth about all these hedge fund guys that appear on stations like CNBC is that they're really not speaking the full truth. Their appearances are not just for show, but they come with a certain bias or a goal in mind. Ackman manages billions of dollars, and there is no way in hell his opinions are not aimed at making sure his firm is making money. Now, I won't get full conspiratorial on you, but there are a few things you have to understand when it comes to national television. Hedge fund managers are not acting in the interest of the public. Their stock market advice is in no way meant to help the average Joe or Mary in America. At the end of the day, they have their clients and their positions worked out well before they make their appearances. Ackman will never reveal his true thoughts on the market because it would work against his edge. Instead, he reveals half-truths and uses his screen time to frame the market in a way that works for him and his clients. Let's not forget, this is a man who screamed and cried, everything is going to zero, but I'm still buying.
Okay, is done. okay? Because no business can survive a period of 18 months without revenue, okay? And stick with me, and that's what happens, okay, if you operate the way we're operating now, okay? Now, let me give you, so that's a very, very bearish thought, okay? And I've been super bearish, but I got bullish, okay? And the reason why I got bullish, and I've been aggressively buying stocks, including Hilton, today, okay? And I've been buying all the way down, Hilton, restaurant brands, Starbucks, walk your way through the only stocks I'm not buying are companies who are on the board and I'm restricted. But the reason why is the only answer for the world is to shut the world for 30 days.
While he states he's bullish on America, the real data suggests otherwise. Like I mentioned earlier, the S&P 500 has rallied 28% since March. The market has exploded, but a cooling off period in the near term is likely to occur according to many analysts. There are many headwinds that will offer a dip to this rally, including heightened Chinese tensions, upcoming election uncertainty, a second health crisis, poor earnings, and the Federal Reserve slowly losing its firepower when it comes to quantitative easing. One of the best indicators to see what the medium-term outlook on equities represents is insider selling. This is a stat that tracks how many company insiders are buying or selling stocks in their very own companies. The theory goes that if you're a CFO, CEO, CIO, VP, or anybody important, you must know more about the real outlook of your firm rather than the general public. Obviously, if there's more selling, that would indicate that the outlook is bearish, and if there's more buying, the outlook is bullish. In early March, we saw an explosion of insider buying, which turned out to be a correct indicator as the market rallied briefly after. Today, we're seeing the opposite. Here's a clip of Jim Cramer explaining.
But we're getting overbought. We'll talk to Art Cashin later on this morning, who's been looking at seasonality toward the end of July. Generally not good. I noticed today Nat Alliance, Jim, says corporate selling, insider selling to buying 5-to-1 is the highest that we've seen. Only 2 times this decade has that ratio been that high. And of course, insider buyers were
How much of that is Moderna?
They gave you a good tell back in March. The insider buyers called that right.
That's just, it's a bad stat. I mean, what can I say? We got some bad stats. We got, after July, the market's weak.
So while Ackman may be voicing an optimistic tone for the future, indicators are pointing to a troubling summer. One big event that could shake things up is the rising Chinese-American tensions. Along with the crazy closure of the Houston consulate, more news is set to have a large impact on the markets. The most impactful of these rumors is the banning of Chinese IPOs in the United States. Right now, the United States of America has freely allowed Chinese firms to open up an IPO on the U.S. stock market. This has netted firms like Goldman billions in consulting fees while making these Chinese firms rich. Raising cash in the U.S. is a godsend to many of these firms, and if the U.S. were to ban this from happening, the door on China will be shut. Take a listen to another clip.
We've got the possibility of a shot across the bow by shutting down a Chinese IPO. And we've got, this is in the pipe. So I'm, just call me a little more circumspect. I told the guys from who run the charitable trust with me, let's find something to sell. I want something sold today.
As you can see, Ackman isn't really truthful about all the headwinds in the US economy that we have yet to face. Time will tell if he's right. We will make a recap video later in the fall to see what really happened. My guess and money will be against Ackman. Thank you guys for watching. Please make sure you hit that subscribe button if you enjoyed.